The biggest risk that I see is illiquidity. You need to be patient. Therefore, you need to have high quality assets that are yielding assets.
Rodrigo, great to see you.
Great to see you, Ted.
I'd love to start by talking about the investment case for Latin America. And I guess we could break it down a couple different components, but let's just start with the economy.
Okay. I mean, the economy in Latin America has been progressing nicely the past few years. And we have always thought of Latin America to be very much in the sphere of influence of the US. So the trends toward, democratic processes in the region, market-driven economies, it's what's dominated, in the last few decades. And Latin America has always been very close to the US. Also culturally, which is very important. The US has always been like an aspirational geography for Latin Americans from a cultural perspective, a place to live, music, sports. We relate very much to that. And Latin America has been evolving very nicely. It's got its swings, its cycles, like every other country in the world, but it's been doing very well. And in this new world that is beginning to get configured, like a multipolar world where the Americas begin to become like a bloc, and Russia and China and Europe separately, the closeness that historically has existed between Latin America and the US, I think, is going to become more relevant for the future. So when we think about investing, we believe it's a region that is attractive because it's close geographically, time zone wise. Valuations continue to be very attractive compared to where the multiples are in the US. You have a very young population growing faster than you grow in the rest of the world. And the classic concern about currencies has been actually pretty subdued. And if you look at the region in the last 10 years, it's become a much more stable region. So we believe it has always been an interesting investment case, but more so at the moment, given where the world geopolitically is going towards.
What's changed in the last, whatever it is, couple of months as Latin America looks at that geopolitical landscape?
So look, I think what everybody's talking about are the tariffs. And if you look at what happened, in tariffs in Latin America, it was a region with which the US was very benevolent. So they are either in the 10% tariff range, or many of the goods that Latin America is exporting into the US are actually exempted from that. Many of the countries in Latin America had free trade agreements with the US. Central America had a free trade agreement. Obviously, Mexico did. Chile does. So the impact, if you look around the world, which are the regions who are going to be more impacted, Latin America falls under the category of minimal impact. So we believe that integration is it's part of the integration that we were speaking earlier.
So within Latin America, a lot of different countries, and the one you've historically focused on, Venezuela, doesn't necessarily fit, at least politically, in alignment with the US.
It does not.
Would love to get an update. From when you last came on a couple of years ago, we were talking about this sort of very interesting risk reward in Venezuela and what's happened.
We still believe Venezuela is a very interesting investment case. Our investment philosophy is that we look for opportunities that have, let's say, an asymmetric risk reward. And we thought Venezuela was the case when we started like 5 or 6 years ago, because it was a country that had undergone a macro shock, let's say. Venezuela is mainly, as you know, a country that produces oil. Its oil production had dropped like 80% from the peak. And in the last 4 years, since we began investing, we got the timing right, and we have seen growth in that oil production up to 1 million barrels of oil. The economy has grown. Our portfolio has grown about 40% per annum the last 4 years, and we believe it still has a lot to grow. So it's still like a third of where it used to be regarding production. So it was a situation where there was a perceived risk much greater than the real risk in our view, and a country that was overlooked by investors for understandable reasons, and that created an opportunity where you could find very high quality assets at very attractive prices. and assets that are basically the basis of any economy in an emerging market. And we were very interested in that, and we were very excited about that opportunity. And that's where we devoted a lot of our efforts in the past 5 years.
The high-level political risk seemed like it was getting a little better, and maybe now not so much. How have you found the opportunities on the ground growing and working in spite of really not that much change in the political regime?
So I would say that as there is uncertainty globally with tariffs, you have a similar situation in Venezuela. So there are some questions that we don't know where the U.S. is gonna, where its position is gonna finish. So people, like mostly in the rest of the world, are a little bit in a wait and see attitude towards what's going to happen, let's say, in the geopolitical sphere. We work in the private sector, obviously, and the development of that part of the economy mostly depends on oil activity, local consumption, and the growth of the wealth of the Venezuelan people. And I think you still find in the critical sectors of the economy attractive assets at attractive prices. And it's a country that has very high quality people and talented people, and the management teams running these companies actually face challenges that are much greater than what you normally see elsewhere in the region with regards to currency volatility, logistics complexity to get goods into Venezuela, et cetera, et cetera. So very, very high quality people in interesting sectors of the economy that you can actually acquire at cheap prices, and you have a lot of growth. You have had growth in the past 4 years, and you have a lot of growth going forward.
We'd love to dive into what you've done in Venezuela since the time you last came on the show.
We have focused on the sectors that we believe have to grow, that are like the basic layers of economic activity. Telecommunications, health, basic industry. We're looking at food assets. So everything that you need when the population is beginning to become wealthier and they're seeking a higher quality of life, and they want to be communicated with the world, and they want to have better health. So those are the sectors that we believe, regardless of what's going on politically or let's say the macro situation around the world, it's sectors that will have increasing consumption. So that's where we've been targeting, and we've been successful at choosing the right companies in the right sectors.
Why don't you walk me through an example?
The most recent one that we've invested in is Pharmaceuticals. So Pharmaceuticals in Venezuela is a very fragmented market, like in many other markets. And since we come from a background of doing transactions, having the ability to transact companies is like a barrier to entry. So we had been looking at the sector for many years, and we finally found a company that we thought was a good platform to do a roll-up. So we love it's an American playbook that we apply there. Buy a platform company, do a roll-up, get another do organic and inorganic growth, and thus with scale you get more efficiency and greater competitiveness. So we followed that playbook, and we began acquiring a company that was like the number 6 in the market. And in the span of a little bit less than 3 years, it's become the number 2 company in the market, the number 2 pharmaceutical manufacturer. So that's meant about a tripling or quadrupling of the size of the company in 3 to 4 years. And doing that in a sector that's so basic to people's lives is really unusual, because normally it's not available. So in most of the economies in Latin America where you go, these are like trophy assets that whomever the owner is, normally families, they don't want to trade it. So having the ability to go into a market which is a little bit overlooked, or an empty room, as you said in the last podcast, allows us to access those assets. So if you have the capability to transact, you have the management team to integrate and grow these companies, and you have the capital, which is it's still in Venezuela, clearly, it's a big strategic advantage to have access to capital, and the rest of Latin America too, but not as critically in Venezuela. But if you had those pieces of the puzzle, capital, capacity to transact, understand the thinking of the families that own these assets, and how do you make it attractive for them to partner with you at what they believe are low prices initially, plus you have a management team who can run it, then you have a winning formula that we believe is what allows us to create growth and value. So local know-how, transactional know-how, dealing with families, access to capital. That makes a big difference, and that helps create value. And that's what we've done in that sector.
In that case, I'd love you to tell the story of how you found the company and then how you worked with the management team.
So we found the company by talking to all the companies that we liked. So, in all of Latin America, they're like, it's not a big community of the owners of the assets. So, we were looking at the pharma sector. We looked at the 15 top players in the market, and we went to all of them, and we had chats. Most of them are Venezuelan families. There were a few that were non-Venezuelan. There was a Colombian firm, and firms from other countries. 1 or 2 Americans. So our first step was to find the right partner, because when we invest in these regions, what we want is a local partner who can also operate. We provide the capital, we help in strategy and other things, but we need somebody to operate. And we found a wonderful family after like 2 years searching. And we began the partnership with them, where they sold a piece of the company. They weren't super excited about selling, but we told them, look, if we deploy capital now in a period where nobody wants to invest, or people are worried about investing in Venezuela, we're gonna together create much more value. We are not the people like doing the exit event to you where you're gonna get wealthy. We're gonna be a catalyst so that we together can create a lot of value, and then we get out in whatever time frame where we create the big player. We believe that having scale in these markets, in those critical industries, provides obviously an operating advantage, but also a lot of value strategically. So we did speak to everybody. So that helped not only in choosing the right platform, but also knowing who else we wanted to partner with and whom else to buy subsequently. All these dialogues take a long time because it's families. So knowing how to deal with them and having the patience, and then maybe at the right time integrating them is part of the trick to make this thing work.
What were the characteristics that you looked for in the family or in the owners to drive the business forward?
Look, so I think in this case we wanted to see expertise in having done prior acquisitions. And actually, this family had acquired a French pharmaceutical manufacturer like a year before we acquired them. We wanted to have a professional management team involved. We wanted to have super high quality reputation of the partner, because it's like a small world in a way. So you want to be associated with high quality people. And it was a family that we had known for many years, and they had been in multiple businesses in Venezuela. And they had the hunger to execute a strategy when everybody else was taking more of a conservative tack. So having the right attitude was relevant, because you don't want to, provide a lot of capital to people who don't want to take the risk. So it took us a while. We were like 2 years having dialogues until we found the family that we liked the most.
The pharmaceutical manufacturing business, like what are the nuts and bolts, the basics of how that business works?
Most of Latin America is not like the pharmaceutical business when you think about it here in the US. So it's not like R&D creating new drugs and very high, very expensive drugs to treat certain diseases. It's more like a consumer product. So it's the sale of non-patented drugs, like a Tylenol of sorts, paracetamol, and the two main categories when you're doing these drugs, it's either you have just a straight generic or you have a branded generic. So branded generics is where the most of the action is, because it's basically you create brands. So the laboratories, the manufacturers are really like brands that people trust. So they go and they go to the pharmacy and they buy different products from the same brand. Or you have a brand, like you have Tylenol here in the US for paracetamol. We have some of those brands in Venezuela. So it's brands that people know. So you go to the pharmacy, you have a headache, you know which one to buy, you're going to go for that brand. Or you have a stomachache and you go for the other brand. So it's more like a marketing operation with production, little R&D, not a lot. and basically working with the doctors and with the patients to, to show the benefit of the drugs you manufacture. So it's more of a consumer play than an R&D FDA approval play like you have here in the US. Still, they're very profitable, 30 to 35% margins, little capex, so they generate a lot of cash flow, which is also very relevant to us.
What most excited you about the opportunity?
We love the sector. I mean, it's a sector that's been growing clearly as people move from let's say lower levels of income to higher levels of income. Health is certainly one of the priorities, and the rate of growth of that market has been, 20-30% per annum for the past 3-4 years in Venezuela. It's an economy under recovery, but these are sectors that are always, if you look at the rest of the region, they're also sectors that grow a lot. And we also like it because it's a very liquid segment of assets. So there's always larger multinational or regional pharmaceutical companies looking to take large positions in countries. So, if you look at M&A in the last 20 years in Latin America, there's been a lot of M&A in pharmaceuticals. So when we think about liquidity going forward and exit, it's a very relevant factor for us.
So you spent 2 years doing the work, identifying the company. When it comes down to buying, how do you negotiate price?
Okay, so I think that we have developed a reputation in that market that we can actually provide a lot of support to the companies. So be it helping them out with leverage, because there's very little credit in Venezuela because of how the local economy works. We can help them optimize operations. We can help them in doing these roll-ups. We can help them think outside of Venezuela, which is, relinking Venezuela to the region is also one of the strategies that we follow for liquidity in the future, and also like to reintegrate the economy to the, neighboring countries. We are convinced that we add that value. And I think, in the market, it's if you look at the case studies of what we've done in the past few years, that is the case. So we look at multiples in Latin America. Obviously, we look at the risk premium in Venezuela, and the numbers that come out are normally not very interesting. So we need to sell our ability to help the company and the opportunity of having more capital to compete and to grow as a value creator. So because most of what's happened in the last few years in Venezuela is that in order to grow, you need capital for working capital. And in Venezuela, the logistics are complicated. So you need more lead time to get your goods into the country. Suppliers worry about the risk of Venezuela, so they ask you to pay earlier. They give you less credit. So all of that means more capital to grow. So having that capital is a competitive advantage. So all of that together has helped us achieve positions in these companies where in the end we do create value, and they are happier having had a larger company with a smaller position than having 100% of a smaller company.
So for a business like what you described, growing significantly, high margins, some question of providing capital, what do you end up having to pay when you bought the business?
So we're paying, historically, actually, the multiples, strangely enough, have been coming down because the companies have all grown. So in the midst of the more challenging time, companies were so much smaller than they were originally that you needed to pay a bigger multiple. Now the valuations are sub 4 times EBITDA. Calux is a portfolio company that we have in pharmaceuticals. We must have bought that at 3.5 times EBITDA. And then we subsequently acquired the assets of Pfizer in Venezuela. And then we subsequently last year acquired the local assets of a company called Vivax Pharmaceuticals. And the multiples were all around there. So obviously much lower than comps. And with the larger size that you were achieving, you could make those into very profitable operations very soon. So it was a very attractive, the value generation was important and the cash flow generation was important. So now the company can just grow itself and fund itself going forward.
So what's happened over the last couple of years since you bought and did these additional acquisitions?
The company has quadrupled, and margins have increased. I think this year may be the first year that we distribute dividends. because we've been using the money to pay for the old acquisitions and fund working capital. We may do another acquisition. So we're thinking about, are we we're now number 2 in the market, like 1% market share away from number 1. So we're evaluating should we just continue in organic growth, or do we do the last acquisition and then just let it continue? But I think it's a beautiful case study because, we've done in a very short time frame. So in 2 years, 3 years, we've built, the second largest pharma company in the country. And, we're seeing the fruits of that effort.
How do you think about the exit strategy from here?
So for Venezuelan assets, what we believe is the necessary condition for exits is that it becomes a geography where foreign investors are willing to come back in and acquire these strategic assets. So what we're looking to do is build those strategic assets in anticipation of that event happening, which we think is not in the short term. It's probably in the long term. So what we focus at the moment is we create value in the meantime, and we generate as much dividends as we can so we can reduce the amount of exposure that investors have to the country. But we're very happy. These are very strategic assets in core sectors of the economy, and we see the growth happening, and we see the brand strengthening, the management teams getting better. So we're very satisfied with what we've done.
So you mentioned you almost expect going into any investment in Venezuela, there's going to be risk, there's going to be volatility, there's currency, all different kinds of things. What have you seen happen that didn't go according to your expectations in the last couple of years?
So I think the main factor that actually we did not anticipate and has been very benevolent to us was the speed of the adoption of the dollar as like an anchor currency in the country. So starting in 2019, we began doing these investments in 2018. And starting in early 2019, like an informal process of pricing local assets in dollars began. Venezuela has always been very much linked to the dollar because they're exporters of oil, mostly to the US. So there's always been dollar currency in the country, and people think in dollars and they price in dollars. But what began to happen is that you would go to the supermarket and the prices would be in dollars. And that created a lot of stability. And that actually was the beginning of the growth phase in Venezuela. And we did not anticipate how quickly that happened. So within the scope of a year, and until today, in fact, all of the pricing of all of the assets is dollarized. They may not be listed in dollars, but the underlying amount for pricing everything is in dollars. People transact dollars and they transact the Bolivar, but that has created a stability and has allowed people to provide credit to clients, and that kind of like put the wheel of internal trade going, which was stuck without anybody providing credit to anybody because you had a hyper devaluation, a hyperinflationary environment that didn't allow for that.
So that sounds like a good thing.
It was a good thing.
How about any things that were tougher than you thought?
Bad thing. Okay. We were of the view that the US had a strategic interest in accessing Venezuelan oil to keep prices low in the US. And the other strategic interest the US had was to solve some of the migration issues that they had in the US. And they wanted to return people from Venezuela back to Venezuela. So in the last few months, that route of, let's say, pragmatism to achieve what the US was seeking, more oil and less migrants, was what was driving the policy towards the US. And in the last month or two, there's been a shift in that, more towards restriction of the sale of Venezuelan oil to the US. And in fact, what it's doing is pushing it to China, which is odd because that would seem counter to US objectives. But that's kind of like where that is going. So that was a development that we didn't anticipate. And although there has been no negative impact to date, we're just monitoring closely what happens. Nevertheless, we believe that because of the refining infrastructure in the southern US, which is, has been built for Venezuelan crude, that's a natural relationship that should endure in the future. But we'll see. I mean, as we spoke earlier, there's many geopolitical things that are shifting around, tariffs, etc. That, again, we're in a wait and see mode like everybody else is regarding tariff and other geopolitical matters.
When asset prices are that cheap in the private markets in Venezuela, how difficult is it to get someone to sell to you?
Not easy is the answer, right? So I think it's about finding the right partner in an industry where you can actually make a difference, because they need to be absolutely sure that in taking your money, they're going to create more value than in not, even despite the price. And we're transparent about that. So we say, okay, look, global comps are here. The discount that Venezuela commands is this one. This is a resulting multiple. We're going to give you more than that because, your company is a high quality company, which is normally the case. And then, they have to fall in love with us a little bit and think that, it's going to work and that we're going to do things together and we're going to help facilitate the exit in the future. And then we bring new things to the table. It's been, Venezuela is a particular case. It's been a little bit like abandoned. So, you come, you provide support, you inject them with energy, with positivity, like how, let's capture market share. So I think that in the end is valuable to them. And it's work. It's not easy. It's not like, at higher prices, obviously you can buy whatever you want, but that's not the objective. We have to be disciplined. We feel that we're very conservative financially, given the risk that we take geography-wise.
How have you thought about exploring opportunities outside of Venezuela within the region?
As we were saying earlier, we always think about the integration of Venezuela to the rest of Latin America and to the world. I mean, Venezuela was always very integrated and it's become less so in the last few years. But we're always looking at how do we integrate these operations in Venezuela to operations outside of Venezuela, because that would facilitate an exit in the future. And that may also mitigate risk of having assets, with more diversified geographies. So we look at the rest of the region permanently. And, as you know, my career has been all around Latin America, not just Venezuela. So we constantly look at other regions to see how we can do collaborations with Venezuela, how we can expand the business that we have there outside of Venezuela, and the capabilities that we've developed there. How do we develop those? How do we use those outside? And where do we have similar circumstances than how we had in Venezuela, like an overlooked region with necessity of capital, with complex operating environment, etc. So Central America is a little bit like that, and we're looking very much into that region at the moment.
So now that you've gone into Venezuela and dealt with the particular challenges of that country, how do you think about what's next?
So we try to think about what have we learned in Venezuela and what have we learned to do right there, and where do we find opportunities that have similar characteristics to the challenges that we face in Venezuela. So I think what have we learned? One, we can operate in complex environments. Number two, we can transact. We're able to acquire assets in environments that are challenging from families. That is normally a challenging transaction to conduct. And doing a roll-up, how do you use fragmented markets and create, more dominant players? So when we look at the rest of Latin America, Central America has been a region that we've been intrigued by because it's not like Venezuela, but it's very fragmented. It's in multiple countries. It's hard to operate in the region because of the same. You have separate countries, each with their own regulations, their way of doing things. So doing an operation that's across a region is very challenging operationally. Capital is available, but it's not the place where you would think a lot of capital goes to. So even for the rest of Latin America, Central America is a lower priority. So it's a little bit overlooked, similar to Venezuela. And for us, that's a big opportunity. In pharmaceuticals in particular, where the partners in our portfolio company have a separate company that they own that operates across of Central America. And they were number 6 in the country and number 6 player in the country in Venezuela, they're the number 7 player in Central America. So we believe that is very similar to the challenges that we face in Venezuela, and the knowledge that we have there, we can apply it here. So we have a good platform company with sufficient scale to do a roll up. We have a very talented management team. It's a related management team to the one that we have in Venezuela. It's a place where our ability to transact is relevant. It makes a difference. Our ability to attract capital is very relevant. It makes a difference. And this team has also conducted some acquisitions in the past, so they know how to do roll-ups, they know how to grow the company organically. And interestingly enough, Central America is a fast-growing region. Very good demographic profile. Healthcare is growing like 10 to 15% growth annually, which is very attractive to us. The increasing wealth in the region, people are improving everything that has to do with quality of life, including food, including better housing, personal hygiene, and healthcare. And food. So those are the sectors that are really growing in that region, and we liked it a lot. Very stable currency. So 2 of the 5 or 6 main markets there already have the dollar as a currency. So overall, we see a region where we can help create that. In the north of South America, you can create a large regional player in pharmaceuticals. And the multiples in Central America are certainly higher than Venezuela, but still interesting from a market perspective, so below market. And what we have seen is that if you create a regional player of sufficient size and diversity in countries, you can command the multiple. When you look at the latest transactions in the past 5-6 years in Latin America, all these regional guys have gone from like 10 to 14 times EBITDA. And the going in price for these assets is like 7 to 8 times EBITDA with a growth, of 10 to 15% per annum. So you buy cheaply, you have a lot of growth internally while you do the roll up, and then you can exit at a very high multiple. And that's what we believe you can execute. And we have the right capabilities in our view to execute there.
From a business perspective, structurally, when you start with a Venezuela-focused fund, how do you then sort of pivot and say, okay, we're start Venezuela, but now we have this management team that can do this in Latin America?
So we're trying to smoothly transition or expand. So we see opportunity in Venezuela going forward, and we would love to do more investing in Venezuela. We're still investing in Venezuela. So that opportunity, I think, exists. We love that situation. We'll continue there. Nevertheless, if we have these opportunities where we believe that we have an edge, either because we know the markets, we know the local families, we have an operational team. Many of the companies that we're looking at in pharmaceuticals, I've known from prior work that I've done in pharma in Latin America. So putting all the pieces together, it's really not an impossible thing to do. It's just that we have the capacity, we have all the pieces, and we have the capacity to put them together, and we want to take advantage of that. So I think I would characterize ourselves as we are opportunistic investors focused on finding situations where we can create a difference and where we can create a lot of value, for the risk that we're taking. So this is like the new space. We have been exploring different spaces. There's a new one that we've found. So we'll begin an expansion into that, and then we'll see where that takes us in the future.
What are the biggest risks that you worry about, both in Venezuela and broader in Central America?
The biggest risk that I see is illiquidity. So you need to be patient. Therefore, you need to have high quality assets that are yielding assets. So, for example, if we can have Venezuela yielding 20% per annum, we don't mind waiting, and that's kind of like the objective that we have. And we think that we can do the same in Central America. So our main concern is, how do you create a base of investors who are at ease with waiting, because they have a strategic asset, but it may take time to generate the liquidity. It's less a concern in Central America than it is in Venezuela. So, but still, I mean, that's a concern.
When you go out and talk to investors today about you said the empty room of Venezuela or broader in Latin America, what are you hearing people's feedback?
Look, I'll say what's interesting is that when we speak to people about Venezuela, 8 out of 10 will say, like, after the first few words, like, oh, I don't know. This is a little bit too much. So listen to the story. Oh, I don't know if I. So the amounts of like immediate no's for Venezuela is very high. So we learned that we just had to, like, obviously very targeted group of investors. But you have to be patient because it's also breaking the let's say the common sense of how people see the opportunity. So when we began speaking to investors about Central America, I don't the 8 now became 2. So we're like, wow, this is amazing. So look, I think Latin America is always like an educational process to investors because it's not the place where people look most at. And we believe the fundamentals are there and these are interesting opportunities. So we have the patience to dialogue with investors, develop their comfort. And I think for the first time that we hadn't heard earlier is many investors are saying that although they would not have looked at emerging markets or at Latin America a few months ago or maybe a few years ago, now they're open to seeing how they can diversify their portfolio that are, at least the investors that we speak to, are mostly focused in the US. So there is an openness to looking at Latin America. And I think, again, like we said at the beginning, this multipolar world, Latin America will certainly be, together with the US, and that will mean further growth, integration, opportunities. We didn't speak about that. For example, Central America, like 20% of many of these countries' GDP are remittances from the US to the countries. So there's a very strong linkage to start. But I think that will continue to develop if the world becomes, more multipolar.
What are you hoping to achieve over the next couple of years with the business and this investment strategy?
I have, let's say, an emotional attachment to Venezuela because I lived there as a child. And so, look, I feel that we do good things for people. So our employees and the companies in Venezuela, I think we've quintupled the average compensation since we began like 4 years ago. Better healthcare, better benefits. So obviously you see the social impact of what you do and, provide people well-being. And I think these geographies and countries and opportunities, and even for the families who own these assets, it feels great to bring capital and help them grow and create, because these are talented people. So create larger players, regional players, big competitors. In Latin America, we always feel that we're a little bit at a disadvantage from the capital point of view. So when you're able to provide that and you see that these teams execute successfully and they do interesting things, we are very proud of that. That gives me a lot of satisfaction.
All right, Rodrigo, I want to ask you a couple of closing questions that I didn't ask you last time.
Okay, a couple.
What was your first paid job and what did you learn from it?
I started engineering, and I think my first job in school, I had to work as a laborer. So I worked at a factory that manufactured fabrics, and I was an electrical technician. So I would clean the lamps, and walk around the place, look at the machines. I don't know. It was educational to see different roles that you have in making things work. So, even from the most basic things are needed for these large factories and businesses to work.
How's your life turned
out? I
out?
had to choose one of those, not answer all of them.
No. That's not how it works. I choose.
It's your rules. Okay, that's fine.
How's your life turned out differently from how you expected it to?
I thought it was just coming to the US for like, I'll do my degree and then I'll stay 2 years and maybe, just get to know New York and go back to Chile. And we've fallen in love with the city and the opportunities and the things that we've been doing. And our 4 kids have been born here. And, we have these discussions like, with my wife, Paula, what are we going to do? Are we staying here? Are we going? Are we going to live maybe here, apart in Chile, etc.? And, we're here. And that's been unexpected, lovely and unexpected.
What's a mystery that you wonder about?
I think it's more like, existential, not existential doubts, but as my children have grown more, thinking about how we help their lives, how is life going to be for them, the finality of life starts to become a matter that it's not like it doesn't overwhelm me, or I'm not thinking about it permanently, but you begin to think about it that, a couple of years ago, we're invincible, we would live forever. And now, the kids grow up and then they make you think about these things. So.
All right, Rodrigo, last one. If the next 5 years are a chapter in your life, what's that chapter about?
Maybe you've experienced the same thing. The change that I've been thinking lately is, with all the information overload and all the production of, media and whatever, I stopped reading like a couple of years ago. I don't know what it was, 3 years ago, 4 years ago, 5 years ago. And I think we become less connected to history, to literature, to culture. So I decided no more electronics or very little electronics at the end of the day, and also reading again. So I began read. I had piles of books, including yours. Then I think it's like 2 books. I'm 2 books away from yours. So I started in January, just beginning to read again. Literature, history, stuff that interests me from a business perspective, because I feel the danger that we live in is that we are losing connection to history with all the devices, social media, etc. And I see it in my children. Like, how do you have them, in addition to what they study in school and read in school, how do you make them continue having a curiosity and having the ability to read more, connect themselves to the culture, to the history, to philosophy. So that's I hope to become wiser in the next 5 years. That's the conclusion. And all these things that I think you go through life and you're like looking at things that I really want to do that. I really want to read that book, and I keep buying books and I really want to know about that. Get it done. So it'll be hopefully a fun next few years.
No, Rodrigo, thanks for sharing this update on this maybe slightly less empty room.
Thank you, Ted. It was good seeing you.